class, and today's title is How Awesome10x Investors Made Money Through 2020 and More Opportunities That You Can Take Advantage of. So the reality is a lot of Awesome10x investors are already sitting with 100 to 200% profits. So it really depends how early you were with us, how early you were, how much you actually acted on our buy calls, buy recommendations. But it doesn't matter. There are still a lot of opportunities that you can take advantage of. So listen in. It's November 13, 2020. Please do note that we are giving free Friday classes, but this class is 2,000 pesos a month. You can get all the access to awesome10x.com. Just go to www.awesome10x.com. 2,000 and you can get access to all the Awesome10x picks, deep dives, something like this. So for all of the people, you should be aware that Joe Biden is the new president of the USA. And we actually discussed last Friday how a Joe Biden and Kamala Harris presidency would affect your portfolio. Do check out our last week on November 6th. So so 7 days ago we discussed it, and a lot of us were actually holding a lot of solars. So definitely a solar portfolio, a clean energy portfolio would have benefited with a Biden presidency and some cannabis names too. Now, as you could see from this cartoon, Joe Biden is here to actually mop up the mess that the Trump administration could have done to the economy and to the world. So what are the surprises that happened this week? This is also something that is important. The market has a gift, and that gift is the hope of a promise of a new COVID-19 vaccine that was given by the Pfizer and the BNTX BioNTech in their discussion that maybe we can get a vaccine all throughout the world, maybe in the next 6 to 12 months. Whether it happens in 6 months or 12 months does not matter for any Awesome10x investor. The more important thing is that the market is acting that in this scenario, even if this is the 14th rotation, so we have really discussed this intently in the inner circle on how many times the market has been rotating from tech to value, tech to value, tech to value, tech to value. We are of the opinion that this could be the final. Well, it's not going to be the end of the tech, but it's going to be the exhaustion of some tech names that would lead you to actually have a momentum breakout that is sustainable for your value names, for your reopening names, for your quote unquote bad stocks, because they weren't secular winners. So the good stocks are, of course, the secular winners. We call them the Awesome10x opportunities. And if you've been following the Awesome10x system, this is the repeat call that these are the secular trends that we believe in. E-commerce, streaming platforms, new entertainment, esports industry, mobile payments, social media, new forms of digital advertising, enterprise software, cloud computing, 5G, D2C, direct-to-consumer, food delivery, ride-hailing, millennials and Generation Z, screen-agers, Instagrannies, robotics, artificial intelligence and automation, OMO, online merging offline education, work from home, alternative meat, international expansion, globalization, athleisure and vanity, self-driving cars, clean renewable energy, the crazy rich Asians, whether they be from the rising middle income of China, India, middle class of Southeast Asia, and of course, the ever dependable VUCA, which is volatility, uncertainty, complexity, and ambiguity. For all the 10 years that will happen in the next 10 years, these industries will actually give you the 10x moves if you know how to actually ride these trends, invest and globally invest in these secular winners. So the awesome 10x system, just to repeat, would have to come from a secular 10x trend theme. The idea comes from a secular 10x trend theme. It could be clean energy, it could be electric vehicles, and the earnings will be carefully studied. Catalyst will be in years' time since it's going to be a decade. And then, of course, you've got technicals to help you in the entries and the exits. Just a few reminders: system risk management. Position sizes, if it's a huge portfolio, can be started with just 3% of portfolio. Huge or small, it will be the same. You can do 3, 6, 9, 12, 15. You can add 5 times. You can have 5, 10, 15. Increasing weights on winners, either through the earnings or some news disclosures that will make you buy more of that company or that industry. Losses will be closed at 20% from entry or less. If you can actually identify that you are already holding a loser, it doesn't mean that you need to wait for it to go down 20% before you sell it. In fact, you could even be up 50% on it and you already know that it's going to be a loser, that you're going to sell it. You could even be up 500% on it. And if you decide that it's already a loser next coming few months or so, then you close it. So losses are actually identified as a loss by default if it's of course a loser because for many reasons secular trend is not intact. Maybe it's your entry point that's wrong and so forth. That is a default setting. We do allow positions room to move if we believe that we are wrong. However, it's an automatic sell no matter if you're up or down. So also number three, the system means that you want to hold your winners even if you're up 1,000% already, but you would trim that position as they increase from 10 to 20% from your entry. One third on that 10% weight, leave the balance to run with the trail stop. This is actually just arbitrary. Sometimes we would be up 100% before we even trim. So winner sizes can be 3% of the portfolio if you want to leave a souvenir. We will try to hold as much as possible that winner even as it goes above 10%, sometimes 15%. So if a winner, let's assume you've got 5% of your weighting in the portfolio, and that 50,000 went up to $100,000, 10%, you can actually trim that if it was $1 million portfolio, assuming 5% is 50,000, or let's say it's $100,000 portfolio, that 5,000 went to $10,000. You can actually trim it back to 5% or 5,000. Now, normally you can even own as much as $15,000 of that company or 15% weight, as long as you know how to trim your winners and partially take it off, even if you're right. So your 15% could be up 20%, then 18%, back it, let it go back down to 15% and less to 10% until it is actually at a manageable sleeping size portfolio of about 5% weight on each company. So this is a reminder that all Awesome 10x investors have to have a rookie and a veteran. You want to have rookies and veterans just like any Pokemon collection portfolio. You need to have some Charmeleons, you need to have some Charizards in order to have a very, very good portfolio. If you're able to buy a Charmeleon before it becomes a Charizard, you'll get a 10x. If you are holding a Charizard, it will protect you when the inevitable market corrections come, because a Charizard is not gonna die as easily than a baby Charmeleon. And of course, a mid-cap company is okay, but it's fine. Sometimes people prefer mid-caps because they're adolescent or maybe like teenagers, such that they can actually become mega Charizards. And they're not too young, but they're not too old either. So I guess there is a perfect scenario. You can have all of them, rookies and veterans. It looks like something like this. Of course, if you want a 10x, the happy 10x portfolio, an awesome 10x portfolio should have a slew of winners. We call it diversification. If you're able to train your portfolio and own the future Charizards, the Bulbasaurs, and all of them, then you've got a super cheap entry, and then you've got a 5x, 10x move. Meaning, if you were investing early on with the Xiaopeng motor, given that you know about the Tesla, the Uncle Tesla, then that Chinese counterpart would have done 100% on your portfolio already, and our Awesome 10x portfolio benefited from that move. Whether that was the Neo, the Li Auto, or the Xiaopeng, I guess you would be saying that it's kind of the same thing with playing a Pokemon portfolio. Can you teach people how to construct a portfolio just by their knowledge of playing Pokemon trading cards? The answer is yes. However, if you're not playing Pokemon trading cards, do you know, just for a fun fact, that Pokemon trading cards like the pre-Raichu, the Raichu release is like more than maybe like $200,000. I mean, I kid you not. So take a look at some old school Pokemon cards. Those rare cards are actually prize worthy if you're able to keep them. So and let me discuss a few things about portfolio construction. It's similar to the game Plants vs. Zombies, or just a tower defense game. A portfolio construction that can sleep well at night should be accompanied with not many sunflowers, not many pea shooters, not many cactuses, actually, because you have to understand a fully diversified portfolio is what's gonna handle all the crisis or anything that the market will throw at you. Take a look at what a portfolio like this looks like. Let's say they've got walnuts, they've got fire throwers, they've got pea shooters, and a lot of sunflowers. To be honest, this is just four sectors. This can actually be easily killed with you and some of those spikies, right? Despite you thinking that you've got a lot of walnuts and defense cards, this is not a truly awesome 10x portfolio. If this one was the portfolio that was given to me, this portfolio is not good looking because it only has one, two, three, four, five. Only five sectors, despite somebody saying that I've got a lot of cash, assuming sunflower is your cash position. What this mistake is also is that too much cash is actually a bad thing. You have to understand that what a portfolio will need was actually just balance. I think a good balance would be to own maybe 20 stocks. So that 20 stocks can significantly help you cushion whatever the market will give you. Take note though that 20 stocks is a minimum. 20 stocks is a minimum, given that you might end up with 40 stocks someday or 50 stocks someday. The reason being there's a lot of sectors. As you've heard a while ago, assuming that, let me show to you the trend a while ago. If you were investing in, let's say one company per trend, let's say for e-commerce, you took Shopify. For streaming platforms, let's say you've got, okay, let's say e-commerce, you've got C Limited and Shopify. So that's two. Streaming platforms, you've got Spotify and Roku. That's four. Esports industry, you've got Douyu and Huya. That's six. Mobile payments, let's say you've got a Square or an Alibaba or a Tencent because it also owns your, or even a Facebook, given that WhatsApp Pay is doing it in India. So 2468, that's just four trends. Social media, you can argue that's still Facebook and new digital advertising, the same thing. Enterprise software, let's say you have a Workday there, or you have a Microsoft there, or a Salesforce there. Cloud computing would still be the same for your Microsoft. 5G, you'd have a Qualcomm or NVIDIA there. Direct to consumer, you'll have a Nike there, or maybe a Starbucks there. Food delivery, you could either have a Grab, which is exemplified by your SoftBank. SoftBank could own all of these because they've got food delivery and ride-hailing apps. They've got the Uber and Lyft. So either you own an Uber and Lyft there, or you've got a Meituan Dianping there, or you've got a SoftBank. It's the same. Even in just half of the discussion, you don't even have a clean tech yet. You don't even have a self-driving cars or electric vehicles yet. You don't even have some alternative needs. So definitely, I find it lacking if your portfolio only has four or five. Either you are lazy or you are I would say you're too overexposed. And that's not how an awesome 10x investor needs to be. An awesome 10x investor has to be very well diversified to handle anything that the market throws at him. Example, if this were to represent a portfolio, it's just miners and the sunflower cash. This is actually a weak portfolio. I could just have a zombie fly over you and you're dead. So in this, what we're saying is that a portfolio that only has cash and maybe some reopening themes, or only has cash and technology name themes, it is not a good portfolio. It is actually a very bad portfolio. And that is something that Awesome 10x investors need to understand. And we made money through 2020 and more IPO opportunities because we take advantage of all the rare opportunities and very great secular trends that's happening in the market. So example, if you'll notice, is this a good enough portfolio? Well, if you take a look at this, especially if you play games, you'll see that if it's all about the watermelons and the corn kernels and the cabbage patch, they all do the same thing. They all do the same. Meaning, if you've got a portfolio representing restaurants, department stores, and airlines, they're all technically the same thing. You don't have a way to defend you if the market's COVID vaccine is going to be later than expected. At the same time, if all that you have would be something like a coconut cannon or a banana, so it will still not be enough. If all that you have if the entire portfolio that you have is just technology or a Zoom video, it will actually be a failure to your portfolio, and you have a disservice to yourself if all that you have is just Zoom video and Peloton. It's not because that we don't believe that the work from home themes are truly exhausted. We think that you can trade the volatility. However, you have to understand that these winners have been running up for the last 10 months at a blistering speed for about 500, 800% up. So naturally, there will be some profit taking that will happen on your Teladoc Health, your Amwells, and all of these exhaustion related names. Even your e-commerce names would at the same time also have a selling spree. Now, at the same time, why will there be some classics? No matter what, why is it that any portfolio will always have a sunflower if this was a plant versus zombie portfolio? Why do you think that in an any tower defense strategy, they will always have a sunflower, they will always have a pea shooter, or at the very least, they would always have a walnut? Because these are classics. In the realm of classics, your Facebook, for instance, is a neutral. They would be able to handle all types of weather. It's like a mega Charizard. Why? Because Facebook has that payment theme. They have the digital advertising theme. They've got the e-commerce in India. They've got the gaming through Facebook Horizons. They even got virtual reality. So in essence, even if you're owning just one Facebook, the reality is it's got it's like five-pronged monster. And if you have, let's say, an SE, like a three-pronged monster, a C Limited will get you coverage for your e-commerce, gaming, and payments. So that, and the same thing with your Microsoft. Your Microsoft would give you cloud computing, enterprise software, and gaming. So if you know that one specific company can give you 3 trends or 5 trends, it's actually more resilient rather than owning simply a niche product. Example, a Peloton is a niche product, a Zoom video conferencing is a niche product. It does very well in a pandemic, but post-pandemic, it could actually have a lower growth, and that would actually detriment a portfolio if the entire portfolio was just Zoom video and Peloton. So that's what I'm saying. A good portfolio is actually resilient. It might be looking something like 3, 4, 5, 6, 7, 8, 1, 2, 3, 4, 5, 6. Now, this is a 48 combo rare portfolio. They can handle everything. You'll notice that whatever the zombie attacks, you can handle it. Magnets, mushrooms, spikes. You need it's a glow in the dark zombie. You can handle everything. It's a frozen zombie. You can handle everything. It's a fire shooter zombie. You can still handle it with some of your frozen cabbage icy spikes. What we're saying here is that your portfolio has to represent the world, the future, an expression of the future. But it cannot be just all electric vehicles. It cannot be just all Teslas, especially if you are not a trader. Because you're an awesome 10x investor, your goal is actually to have, example, if you believe that electric vehicles will become stronger and stronger, then you'll have to add more electric vehicles in your portfolio. Meaning I should have more mushrooms. Example, these are all the same, right? Mushroom here, mushroom here, mushroom here. All of these are night related plays in Plants versus Zombies. Similarly, in the real game of life, in a portfolio game, or in a portfolio construction game where real money is at stake, I'm being serious here, okay? I'm not trying to toy with you. I'm just using Plants versus Zombies as an analogy. All I'm saying is that if the market loves all the electric vehicles, whether that be a Tesla, a 175, a 1211, Lee, a Neo, an Xpeng, a GM, or a Ford, it all looks the same. Even an Aptiv, a Gemini, yeah. So all of them, even your Helia, even your Workhorse, all of them, Arcimoto, they all will behave in the same secular trend. Similarly, whether you own a SunPower, a Sunrun, a Canadian Solar, a First Solar, an Array Technologies, they would all be in one same sector. So in a way, even if you think you own 5 or 7, 5 times 7, let's say 5% each, and 5 times 5, you'd be 25% exposed in that sector. All I'm saying is that you have to understand that you can be overweight a sector, but also be underweight a sector, even if you have a 50 combo portfolio. So that's really something that I need you to understand. Now, in the digital advertising, I just want to say that there are some exotic surprises, at least on my end. I don't think that everyone actually expected that Snapchat would be a 10x move in 2 years. Yes, even Spiegel, Miranda Care, this came from about $5 and rallied to an all-time high move, 5 to 45, or a 9x move in just 2 years. The March low was something here near below 10, and now it's trading at $40. A chartist knows that the Snapchat all-time high move would have a lot of buyers, 35 to about $30 if there's an entry point. I haven't studied the fundamentals of why Snapchat is outperforming, but in my view, this is something related to the digital advertising and their Snapchat spectacles, which is a virtual reality play. Of course, Pinterest has been doing so well. It has rallied from as low as 10 to as high as 70, or a 7x move. This outperformer is already not anymore in the regular slope. It's already doing a vertical move. I would think that there will be some sort of this outperformance would somehow correct here near 50, in which I want to enter. From a charting perspective, these great outperformers are things that I am on the lookout for as an opportunity to buy if I can get an entry point. Mostly because why am I looking to buy them? I do not think the market has overly positioned on both Snapchat and Pinterest as much as they actually position on other digital advertising. And it's really a reopening play if you think about it. The more reopening markets are, of course, Facebook and Google benefits, but also the small, you could say they are the small they're not the Charizards. The Charizards are your Facebooks and your Googles, but they're your Charmeleons, which or mid cap that can actually perform and give that bang to the buck for your Awesome 10x portfolio. We'll put this on our watch lists. Now, Nintendo is more of a really a high quality Pokemon, just like their own high quality Pikachu. Nintendo in any Awesome 10x portfolio, we liked it ever since. We said that Nintendo is a no-brainer stock pick. Any Awesome 10x portfolio has to have it. This one, in my view, is just a breakout from a it's just a continuous breakout from about $30 to as high as $70. It corrected back to the 61 area. 64 is actually an opportunistic area to buy Nintendo. So Nintendo, of course, is software and hardware, did very well on their earnings front. Animal Crossing, for instance, was 14 million copies. And the beautiful thing about Nintendo is that Nintendo has a software and hardware. They create their own games, so it's not like they are just publishing. They are also the publisher and the developer of all these games, such that they enjoy actually one of the most enviable 90% gross margin at times on their software digital sales. So in my view, Nintendo is one of the most undervalued video game conglomerates versus, say, Sony or Microsoft. So in that view, or even a Tencent, I understand that I can't like always compare them apples to apples, because Microsoft is not just a gaming company, Tencent is not just a gaming company, so is Sony. They're not just a gaming company. However, yeah, in my view, Nintendo is still an undervalued gem. I should be seeing a $300 move for Nintendo if I waited about 5 to 10 years. So Nintendo will continue to be a buy in our portfolio, and any dips here at about 64 all the way to 56 is an opportunity to buy. It's a neutral if you think about it. It's not as it's not gonna be affected. COVID vaccine is there, COVID non-vaccine is there. It doesn't matter, because when your business is very resilient, people play video games as an entire secular trend, with COVID, without COVID. So that trend is intact. And with the fact that it is not overly stretched, you don't see it trading at $100 yet. It's not yet 500% or $300 yet. You still get that upside. If you buy it at 60, sell it at 200 to 300, wait it out, and you'll make that money. Now, Lyft, in my view, is also a surprising move in my view. So just recently, this October, November, we are seeing that Lyft has rallied somewhere from about 20 to 40. I'd say that this 100% move, while it might look for other people as great, it is still well below your 2020, 2019 area. So in my view, this is just a turnaround play. Lyft and Uber are now actually being posited as a potential food delivery, not just a gig workers economy play. Of course, we know that the gig economy has been pushed, extended for your Fivers and your Upworks. And this, in my view, is something to take a look at. So Lyft and Uber looks to be a company in this October-November round that would actually surprise to more all-time highs. So Uber actually broke out of that 36 to as high as 40 to 46. I'd say that Lyft and Uber are worth taking a look at. Snapchat and Pinterest are worth taking a look at. Lyft co-founder on food delivery last November 12, the opportunities and the future of ride sharing. So John Zimmer said, so they joined the Yahoo Finances, Verizon, Sozi, faring amid COVID-19. Ride-sharing giant Lyft is driving towards profitability next year. Let's talk about that with John Zimmer. Good to speak to you. So John, your most recent quarter, it was a comeback quarter in many respects. What are you seeing in your business right now? Quarter over quarter, our revenue went up 47%. We are seeing that recovery. Ride sharing is recovering. As you well know, ride sharing is a secular trend and also it is a reopening trend. So that is how Awesome10x is also thinking of. Obviously, COVID is still a major factor, healthy safety for the country, for the world, specifically for the people's movement or around in their cities. Obviously, I am biased, but I cannot think of a better recovery stock. As the economy returns, so does the rest of our business, and we are excited for the next big year. In my view, I agree. You can read more on their earnings transcripts. In my view, some people would say that Uber and Lyft are perennial cash burners, and that would be a risk. However, chart-wise, I don't think there's a lot of sellers at these levels. So Uber, maybe there's some selling at 48. Wait it out at about 40. If there will be entries, put it on your watch list. Same for Lyft. Even if there is a strong seller at 40, try to see if there's a buyer somewhere here at about $30. If we can enter at 30, we are going to be able to median, like just get the near the 30. You don't need to get 20 because I don't think you can get it that low. Put it on your watch lists. Okay, this is an example of what an Awesome10x portfolio looks like. Okay, I'm gonna read to you all of them. Agora, Alphabet, RC Photo, Beyond Meat, Bloom Energy, Canadian Solar, Serens, Doyu, Imagine, Facebook, Fiac, Flying Eagle, Futu, GAN, Gores Metropolis, Hanson Moritz, Hexo, Copen, Limelight, Live Oak, Maxion Solar, Nintendo, Nvidia, Ocado, Palantir, Qualcomm, Razer, Reinvent Technology Partners, Sea Limited, SoftBank Group, Sun Power, Switchback, Take-Two, Tattooed Chef, Tobii, Unity, Velodyne LiDAR, Vuzex, Walt Disney, Xiaopeng Motors, and Zoom Video. So if you just look at this portfolio, you can identify several trends that is being played out by this Awesome10x portfolio constructor. And this is something that I personally handheld. So you can see that they which secular trends can be evident in this portfolio. This portfolio has some Chinese live streaming play, which is Agora. Agora helps, but the thing about Agora is that it is a gaming / live streaming play. Alphabet is positive in digital advertising, so that is actually a big tech play. It's a wearables play with healthcare Fitbit. But also, Google has so many startups inside. They've got the Waymo, they've got electric vehicles as well. And of course, Google is very much well known with YouTube, digital advertising, and search advertising. Alphabet, whether you understand it or not, is more of a reopening play rather than a COVID resilient play. Same for your Facebook. These are actually, Alphabet and Facebook are very big in nature, but they're not necessarily a tech name. They can actually be seen also as a COVID resilient play. I'll give 2 stars for so what we'll do is +1, -1, and 0 for a neutral. What I mean is that assuming that it is a tech play, okay, we're gonna do something like this. Let me just give you I'll give you a scorecard. We'll do something like this. Take a paper, guys. Sorry, I look like a teacher, or I try to sound like a teacher. Get a piece of paper. So let's assume that the portfolio has to be resilient. And it has to handle anything. If the COVID vaccine is somewhere within the next 6 months, what would rally a lot? Of course, the ones that rallied this week very much was your Disney's, right? So we'll put a +1 on your reopening themes. Okay, assuming our bias is that we are gonna reopen, our economy will reopen in the next 12 months. That means that let's take a look at this portfolio. How many reopening themes does this portfolio have? Okay, I'll name them. You've got the H&M, so that is a +1. You've got the Disney, so that's a +1. Futu, which is a brokerage firm, is also like a +1 because brokerage firms, it's a reopening play. I know it's a little bit neutral, but also the more that people are making money in a bull market, the more likely that Futu will actually profit. A more broader based bull market. We're talking about a broader base, not just technical technology. So Futu is actually a little bit skewed on the +1 side. Another reopening play here would be, well, SoftBank is also a reopening play, given the fact that SoftBank has a huge stake on Uber and Grab. And of course, the nice thing about Uber and Grab is that they are already part of SoftBank, whether you want to buy Uber per se or Grab, or simply just get SoftBank. So of course, FB and Google are also digital advertising moves. So that means that it is also a +1. I'm gonna scorecard your portfolio. Wait up, guys. Oopsie. I'm gonna scorecard your portfolio if it's a portfolio that is good for the next 12 months and next 10 years. Okay, so let's see. Your GAN is also a +1 because that is a casino. It will benefit the more land-based casinos go online, but also the fact that casinos, whether they are online or land-based, it's all being handled by GAN. The more you play in casinos, the more GAN will profit. So that is actually a reopening theme. Okay, so I think that rounds up his reopening theme. Out of I think this is a 30 stock portfolio. He's got 1, 2, 3, 4, 5, 6, 7. He's only got 7 reopening themes. So it's about 25% reopening theme. Let's take a look now on his secular bets, and it's very clear. He's got some EV. He's got electric vehicles, RC Moto. You've got RC Moto FUV. You've got XPeng. Okay, I can see that. You are happy with your electrics. This portfolio also likes a lot of, well, I could see that you've got some wearables. So I can see that. You've got an Eman and a Kopin. So very small positions, but you do have it. You've got some cannabis names. I can see that with your Hexo. So some positions, a small cannabis position, I can see that. I could see that you've got an e-commerce inclination and you've got a video gaming inclination. I will call it all out here. You've got the e-commerce exemplified by your SE. You've got the e-commerce exemplified by your Ocado. You've got gaming through T2. You've got gaming through, well, NVIDIA is 5G plus gaming. So let me put it there. You've got some Nintendo. Okay, that is also gaming. So you've got Eman, Kopin, Vozy on your wearables. Gaming also for Toby. Razer is a gaming. So this portfolio has a lot of gaming inside. Okay, for solar, let's discuss your solar picks here. You've got SBE, that is charging station. You've got Canadian Solar, that would be a solar play. You've got Maxion, that is also a solar play. You've got Sun Power here, which is also a solar play. Clean Energy, Bloom Energy. It is also a fuel cell technology, which is alternative energy play. I forgot a while ago, you've got FIAC, which is also a gaming play. Doyu was a gaming play. You've got LiDARs, I can see that, GMHI and VLDR. So that's electric related. You've got some LLNW. I would argue that Limelight is more like a value play for you. So let's put it the same way as the reopening, because Limelight is trading something like 1 times to 2 times price to sales. So it's a value bet. Okay, I can see that. I forgot that you also had Unity. So Unity is also in part of your gaming play. Palantir is a cyber security data play. So PLTR is a SaaS related name. You've got Zoom. So that is also technology, SaaS related name. I'm like analyzing. Beyond Meat and Tattooed Chef are your alternative meat plays. Okay, so I think I understood this entire portfolio very much. You've got a huge weighting, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 companies in this list is actually a game. So when you understand this entire portfolio, 10 over 30 names, that is a very huge overweight on the gaming portfolio. It is a very much gaming and gaming related portfolio. Similarly, if I count all the clean energy, you've got SBE, CSIQ, Bloom Energy, Maction, Solar Power, 1, 2, 3, 4, 5. That's 5. You've also got FUV and XFEV, that would be 6 and 7. I'll put that in one group. So 7 names on your electric vehicles and solars, 7 names on your reopening themes. You've got a little mix of that cannabis, just 1. You've got that a little bit of that plant meat play, which is 2 names. You've got the FUV. You've got also 3 wearables. This 1, 2. I'll count it. 1, 2, 3, 4, 5, 6, 7, 8. You've got 8 sectors in this portfolio. In general, I'll give this a B plus portfolio. This is a B plus portfolio. It could be an A plus portfolio too, depending on how this person is trading the portfolio or not trading the portfolio. The key in an awesome 10x investor is to be diversified in many trends, and whether it's an equal weighted portfolio, meaning every part of this position is, let's say, 3% each or 2% each. All of these, sorry, I forgot. Even Loke is here. Loke is actually a biodegradable plastic play, which is environment related. You could argue that Loke is also a reopening play because Loke is a value play. Anything that is value and reopening is actually part of that list. So, oh, I forgot. And he's got 5G, which is Qualcomm and NVIDIA. So let's put that in the 5G Qualcomm. Okay, this is a good portfolio. Why? I'll explain why. This is a good portfolio because it can handle and counteract any enemies that will come into the market. If the market headlines tomorrow is that the COVID vaccine is ready to be distributed in the entire world, you will notice that Zoom video will go down maybe 25%. At the same time, the market will be happy and probably push up your Walt Disney's, your H&M's, your maybe your GAN will also rise, your Facebook and Google will also rise, but really an H&M will rise because apparel, clothing, right? So in a way, this one has a lot of counteractive names. If really tomorrow's headline is that there's a COVID vaccine. At the same time, it's got enough it has enough secular trends to handle any volatility because it plays the secular trends. Like it has all the gaming, which is an inevitable secular trend. So yeah, and then of course they have a little bit of e-commerce. This is what a portfolio would look like. An awesome 10x investor. The reason why I shared this to you, I co-handled this entire portfolio, and so it's up. It's up. It's outperforming the market. You can actually check anyway. All the movements of that portfolio. Assuming you held that portfolio all throughout the last 10 months, that portfolio is actually an outperformer. So that is what an awesome 10x investor does. You have to have all the secular trends as much as possible. Although it can do better, we can add some. We can probably add some Pinterest, Snapchat. We can actually add that Uber Lyft again in this portfolio if you want some extra reopening themes. The view is that if we're gonna have more reopening, we can trim the Zoom video. We can trim the C limiteds. We can trim some tattoo, some Take Two. some games. We can trim some of that. So some Unity software can be trimmed so that we can allocate more to some reopening names if we are right that that the market will now rotate. I'm also going to share a sample portfolio, also the same type of thing. So you can see here some Japanese stocks, some Philippine stocks. Example of a Philippine stock portfolio. This portfolio has some East West Bank, some Philinvestland, some PNB, some PLC. So that would be a property, a bank, and a casino. That is a Philippine related theme. It could also have a Jollibee's and a Shakey's Pizza, but actually you can also have that through different methodologies. So you'll notice that in this portfolio, in this sample portfolio, I also co-created this portfolio. You've got everything. So let me read for you. Ocado will represent your e-commerce. Geely Auto will represent your electric vehicles. Razer will represent your gaming. Nintendo is gaming. SoftBank is a big conglomerate, big tech. It can handle ride hailing, social media through TikTok. It can handle the AI, artificial intelligence through the ARM holdings and NVIDIA positions. Actually, SoftBank is a very well diversified portfolio. That's why we like SoftBank. It's a neutral, meaning SoftBank can handle anything. The COVID vaccine tomorrow released, COVID vaccine does not release, it can handle. That's why it's a good portfolio. That's why it's a good, well-diversified portfolio or a conglomerate if you think about it. East West Bank is actually a reopening theme. If the banks will buy, whether it be JP Morgan's in the US or Philippine banks, it will actually outperform eventually. So you could see that these are actually it's actually a Charmeleon. It's not like a Charizard of the Philippines. The Charizards of the Philippines are BPIs and BDOs. Owning a PNB and an East West Bank is actually owning a small bank. And the thinking is that a small bank would outperform higher beta if a true reopening coincided. Similarly, a PLC is a smaller casino versus, say, a Bloomberry. Similarly, you can see that, so that would be a casino bet. It's a small casino. H&M is a play on retailers. So whether it be Zara, whether it be Marks and Spencer, whether it be Henson Moritz, if you take a look at all the charts, it was a breakout in this entire week because of that Pfizer COVID vaccine. Alphabet would be stable, similar to your SoftBanks. Same with your Facebooks. It's actually more like a never sell. Even a Microsoft is more of a never sell. If you have an Amazon or an Apple, these are or even a Tencent and an Alibaba, they are very resilient. Roku is actually a resilient play, not just about connected TV. It's not just about connected TV. It's actually a digital advertising reopening move. Same as for Magnite. Roku and Magnite is actually a digital advertising move. So you could see that already these are reopening themes. Some Awesome10x investors opine that APPS or Digital Turbine is actually a good play as well on the digital advertising move, and I agreed. So some portfolios, some Awesome10x portfolios also have apps, APPS or Digital Turbine. Some portfolios who have the trade desk have massively outperformed, and that is, of course, a congratulations. And it is a beneficiary of mobile advertising, connected TV. That would be for your Roku. And so the more streamers will also benefit your Roku, whether it be Disney streaming, whether it be Netflix streaming, as Roku benefits on all sides. That's why Roku is very a rare 10x company. It could even be a 100x move. Roku is a staple. It's one of the portfolios that we have, that we continue to own. It's one of those very strong movers for us. It's a never sell category for Awesome10x. Roku and C Limited are quite never sell. Roku, C Limited. Spotify is more of a streaming play. So it's more of the podcast. It's not too much of the reopening. So it's just streaming. Funko is actually the reopening play. Funko is a value play here at about $6.50, $6.60. Buying Funko and accumulating at $6 could actually yield you something like $10 within the next 6 months. If we are correct that Disney opens up, take note that whenever there's a Disney movie or a reopening of actually any powerful IP is covered by your Funko. So you can actually correlate that. You can actually check that with every blockbuster movie of Disney, Funko actually benefits on that move, even because of the fact also that Funko is a very small company. So it's actually a reopening move. You'll notice that Walt Disney is good because it's both reopening, but it's also got streaming secular. So that's how we play it. Disney and Funko are reopening themes. Unity is more of a gaming side. It's also an IPO, but it's more of a neutral. It's neutral. Vuzix is a wearable, but you need to play virtual reality to actually either virtual reality or pandemic. It's also pandemic proof. Wearables is actually a bit of a neutral. It's not positive, it's not negative. So why is it neutral? Because wearables will be used in the next future, in the next 5 to 10 years. Actually, a lot of companies already are using Vuzix. The hospitals use it, the Walmarts use it. For medical professionals, they love wearables because it allows them to assist patients. So there's a lot of use cases for the wearables. Copen, Vuzix, and Eman are actually uh, the play there. So actually, you've got the Vuzi here, you've got the Copen here. So that is actually a wearable related play. Palantir will be data analytics, and also Palantir is also saying that they can help Britain and all these countries find a vaccine tracker. So Palantir is actually quite a strong SaaS name. It is a technology name, a subscription economy name. But the thing about it is that the subscribers of Palantir are your governments and mostly big ticket companies. Reinvent is a SPAC, so this one relies so much on Mark Pincus and Reid Hoffman, the LinkedIn co-founder. My guess is that Reinvent is more of a gaming related technology play. So this one is gonna be it's gonna move depending on what is really inside. Grow Generation, of course, is a Biden beneficiary. The current administration, Kamala Harris and Biden, are of course proposing legalizing marijuana, medical marijuana, recreational marijuana, perhaps, and that will actually benefit your Grow Generation for the next 3 years or 5 years to come. Ericsson is a 5G play. Bloom Energy is a renewable energy play. DOYU is a gaming play. So you'll notice here, you've got a slew of sectors that are teaming in this snapshot, and this is why this portfolio is awesome. I wanted you to see how awesome portfolios are constructed. CrowdStrike is a cybersecurity play. It benefits because Amazon cannot live without it. HSBC cannot live without it. So COVID vaccine is there. COVID vaccine is not there. CrowdStrike is actually a neutral. It's actually an outperformer because just like Facebook, it's a can't live without. So CrowdStrike is a can't live without kind of company. So Microsoft is also something like that. It's a can't live without. So when you take a look at your portfolio, take a look at whether it is a can't live without. Now, when we are saying rookies and veterans, you can argue that Beyond Meat is bigger than your tattooed chef, but both of them deserve a place. So there's actually a tattooed chef here, and there's a Beyond Meat here. It's a plant meat related play. We know that Kellogg's, Conagra, McDonald's, a lot of Starbucks, diba? They all are proposing a lot of vegan items for you for the next 10 years. So the more that the veganism trend or the vegan trend, the flexitarian trend becomes bigger and bigger, the alternative meat trend, these would all benefit. So a 10x portfolio has to be recognizing that and should reflect that in their portfolios. Novus, this reason, is an indoor farming play. So you could see that this portfolio believes that sustainable green indoor farming is gonna help us because technology can help also sustain 100 million to 5 billion people population. Our population in the world is about 7 billion. So actually Novus and Loc are actually environmental society guideline plays. It's not just about clean energy. The more that the world needs to do biodegradable plastics, Loc is actually one of those best beneficiaries. And of course, if you're doing a sustainable planet life, Novus Capital, aka Indoor Farming, which is sponsored by Martha Stewart, will actually benefit. Yeah, I have um I have a lot of things to share as well for you. Wait up, guys. So I want you to study Lyft and Uber. I didn't do a deep dive for you, but you can study that for yourselves. Study Pinterest, study Snapchat. These are also some important things that I want you to know. So I want you to know that inside the inner circle of Awesome10x, okay, so let me now give you a slight plug. What does Awesome10x give you? www.awesome10x.com. So whether you're a newbie or a veteran, you go to the awesome10x.com, you sign up for the courses because this is what's waiting out for you. You sign in, your email, your password, you get access to these courses. The Global Investing Core Training teaches you how to construct a portfolio similar to what you saw a while ago. So those are actually carefully handpicked by Awesome10x team, i.e. me. So I am the one that's really giving all the recommendations and the classes and the processes, how you build your first ever global stock portfolio. We have a lot of great content that you could read, you can watch. Of course, there are a lot of free Friday classes for you to verify our Awesome 10x ideas. Did the Awesome 10x make 100% or 200% or 500% on those picks? Diba? Like if you were listening to Xiaopeng, then you could understand that we did make 100% move there. But even if you aren't, let's say that so let's say you want to understand these companies better. The best thing is that, for instance, let's say, Nikki, I don't know what SDE is. I don't know what ChargePoint does. So does it fit to your portfolio? The best way for you to understand is that you go click this, you watch it. So you watch the game. Sorry, you watch the game. You watch a 1 hour class because it's all done for you, and we will explain why it will move this much, la la la. So those are like our ideas. Example, you'll notice that for Henson Moritz example, how data science wins in fashion retail. So you could see that actually this is H&M, Henson Moritz. It's trading in Stockholm, Sweden. Yun. So in our view, this one is a reopening play. Of course, there is a reason, a secular reason also why this is a value play. So we are also not just about growth. We're actually we are a portfolio that can do growth and value at the same time. So Henson Moritz is actually a value play. 167.85 SEK Swedish kroners. We have an idea that 167 to 134 should actually be bought. So why will we buy it? You can actually watch that Awesome 10x channel, and you can watch it here. Our reviews, what we reiterate, buy calls and sector calls. You'll notice that we've had a successful, you were asking how Awesome 10x made a lot of money through this time. We made money while sleeping because we were working hard every time we are awake. We are actually creating portfolios that are secular winners. So example, Palantir, that was up like 75% recently in just a month. So it doesn't mean that just because you're a November student or an October student that you can't make money. This was just in October. So we got in October around 9. You could see that 9 is now at 14. We sold some at 14, 15, 16. Some of us were even able to sell at 17. You can evaluate that that was an almost 100% move. Similarly, same for some IPOs that we've made some money from. Xiaopeng Motors. We bought in at about 20. It's now 44. So 100% up, guaranteed. Of course, we don't guarantee, but we have a high hitting ratio. We are taking a look, of course, at the Airbnb IPO. It's coming out this December. So if you're asking what is one of the better reopening plays, Airbnb, the marketplace works, this might be one of the companies that should be a part of your portfolio. So inside the courses, all of these, the categories, you can watch it all for yourself. You can actually see whether this fits for your portfolio. So in summary, the key idea is that in order for you to make money, and you can do the following. Follow us in our channel, the Awesome 10x channel. See what Joe Biden will mop up. what will Joe Biden do in his presidency? We already said that there will be some cannabis names that will benefit. And actually, we benefited on them even before the Biden presidency was announced. As early as a few months ago, you'll notice that as early as August, we have been opining to get some cannabis names. Truly, relief you can rely on, August 20. Let us connect vertical farming. Let's feed the world. That one has Green Thumb Industries inside. China's battle for its very own Tesla, enter Xiaopeng. That was August. So you can see that there's a lot of money that you can make if you follow Awesome10x, especially if you are somebody without any time. You don't have time, I suggest that you go to Awesome10x and help us create that portfolio for you. So 10x moves from companies that you've never known of. How about you go to our channel so that you'd learn and earn with us, and you get a sneak peek. Awesome 10x will give you a summary of our updates every day. So a summary looks something like this. Let me show to you. Let's say the theme is you want to buy some reopening names. Let's say you don't have a reopening name in your entire portfolio. You just have technology. You just have Zoom videos, some Facebooks and Apples and Microsofts. So you might actually benefit from owning some Hens and Moritz. That would be H&M. You might actually benefit from some Zara's, from some QSRs, from some Shake Shack, from some Starbucks, from some Funko, Disney, GAN, Melco, Miniso, and Airbnb IPO. You can even benefit from a department store play like JW, Nordstrom, Macy's, and Bed Bath and Beyond. So you could actually see that it really depends on your portfolios, but we have to structure your portfolio such that it has to reflect the future, but it cannot be just reflective of one sector. So it cannot be just e-commerce that you are reflecting in your sector. It cannot just be cannabis that you are reflecting on your sector. As much as possible, remember this: if you need to understand the opportunities, you cannot just own a work from home portfolio. You cannot just own a digital advertising portfolio. What you want is to have a huge chunk of many trends, whether it be artificial intelligence and automation, 5G, so that you can actually sleep well at night and get that 10x move that you wanted in the first place. So that's it. Thank you very much, and hope